The sooner that you start experimenting, the sooner you'll start learning and the sooner you'll become educated. I don't think that you can fully AI your process now, but if you don't start now, you are going to get left behind.
Welcome to the Agentic Allocator. On today's episode, we're joined by Chris Hartnoll, the CEO and Managing Director of HICO Investment Group. Chris operates at the unique intersection of institutional investing and industrial technology and innovation.
I don't necessarily see a world where there's not a human in the loop. I view it as the combination of the human and the AI.
At HICO, he built and oversees a global multi-billion-dollar platform that includes a sophisticated multi-asset class endowment-style portfolio paired with direct investment and incubation of new ventures in sectors like maritime logistics and energy transition.
During rapid sort of changes in the market, the teams that have adopted AI, their ability to respond to the market will be much faster, more responsive, but I think also making better decisions.
Today, we're exploring Chris's blueprint for the modern investment office, how he balances an endowment-style portfolio with a company builder approach to direct investments and incubation, why he believes the investment industry is ripe for AI disruption, and where the most significant leverage exists for LPs.
There's just these real ground truths that are just absolutely critical to answer, but they're not necessarily sexy tasks that the team are having to do, and it's not necessarily what jumps to mind when you think about adopting AI.
I hope you enjoy the conversation. Chris, you've navigated some of the highest stakes environments possible, from aerospace engineering at Rolls-Royce to Morgan Stanley M&A advisory, and you were also a Royal Marine. What did those experiences teach you about risk and how you invest today?
That's a great question. Those are three quite diverse experiences in my life. So I'll try and pull them together on one thread. But I think operating in those high risk, high stake sort of environments, I think there's really two sides to it. I think one of which is being prepared. So doing the work in advance, trying to understand the risks, trying to think through what will happen after the action and sort of how you might respond. I think actually the Royal Marines was the one that taught me that you need to think through both the downside, but also if opportunity presents itself to take advantage of it. So I think that preparation is key. But the simple truth is the only thing that you can guarantee is that it won't go to plan and that something will pop up that's unexpected. And I think that then going into that experience and knowing that the sort of field will open up, that things won't go your way, I think having done that preparation, you're much more prepared to confront those opportunities and those setbacks and respond to them because you've already done the thinking up front. And therefore, you can be much more focused on execution rather than being blindsided by some of those setbacks when they come.
That's incredible. And it's very topical for a conversation today around capital allocation and AI. And HICO has done a lot to prepare for adoption of AI internally. But before we touch on that, would love to also speak about some of the cultural elements that HICO has uniquely. There are two specific elements of the organization. You have an endowment-style portfolio balanced against incubating and investing in high-velocity technology companies like AI. How do you balance those two elements internally?
Yeah, that's a great question. And it's something that we grappled with a lot at the start of building HICO. So we had an aspiration to combine both of those fields and both of those teams and really have both disciplines operating alongside and sort of mingle together. And I think what I learned through that journey is that they actually are two very different processes. The capital allocation process is a very different process to running and managing direct deals. And I think that trying to put those together and have those processes too close together can create a lot of challenges in the organization, a lot of noise. And so what we realized was that what we wanted was the sharing of information. We were seeing deals and companies and technology and opportunities that were then feeding back to the allocators. And the allocators were being exposed to some of the smartest people in the world and sort of gathering their ideas. And so what we've really focused on much more is trying to create a much better flow of information between the two teams, building sort of one culture across those teams where they share that, and that's been very successful. We see associates on both teams networking, spending time together, and swapping stories. But the lesson learned for me is that those sort of businesses and what they're trying to achieve operate very different processes, and for good reason. And actually keeping those separate is a good thing.
Super interesting. And you recently described OMAI as addressing a transformative yet overlooked opportunity within the ecosystem. So bringing intelligent automation to LPs and allocators. Why do you think the industry has been okay with their manual processes for so long?
I was thinking about that on my way over here, and I think it's that thing that we love we love to sort of give other people advice, and especially whether you're a direct manager investing into businesses and you're sitting on their boards and trying to point out where they can improve the business, or whether you're an allocator talking to a manager and sort of pointing out where you think they can tighten their processes and their alignment with their own thesis. I think it's just human nature that we're outward looking, and it's very easy to give other people advice, but it's rarer that we sort of take a look at our own house and reflect on that. And I think, we've had ChatGPT, OpenAI has sort of released that, I think 3.5 years ago now, and it's amazing to me that the allocator community still is still quite reticent to adopt it. But I think it says a lot about both human nature, but also about just investment firms in general. I think a lot of CIOs have built their process through years of experience, and the idea of changing that in a sort of dramatic way through the introduction of AI, I think runs contrary to the traditional wisdom of being conservative with how you develop and build your investment process.
And HICO obviously has taken a look at its internal processes and is far along the path of AI adoption. You've started off by addressing the kind of foundation from a data perspective. You're extremely digitalized, which is very unique for the industry. And so, right now, when you're looking at specific use cases like LPA analysis or DDQ analysis, how do you think about implementing that internally?
Yeah, so we've done a lot of work up front, and I think that's a critical thing to do because you have to take security seriously. You have to set up the guardrails, the privacy. That there's a lot of groundwork that you need to do, and it's not sexy. It's really operational, and that's real work. But once you've got that, I think it's quite liberating. To go back to the analogy of realizing that you need to sort of just adopt AI in some way, shape, or form and just start to experiment. And how we thought through that was that trying to apply AI in some of the most discrete process steps that we have, where we have a clear understanding of the input and the output, and where we can really apply it in a measured way, measure that output, measure that the impact on the organization, and start to experiment, but also build comfort and comfort in the team and in the organization with applying AI. So we've taken very much applying it to our building blocks and our process, and with the idea that this is going to be a multi-year process for us to learn and adapt and integrate. And I'm sure it won't go right every time, but it's only through doing that we're going to learn where it's really valuable.
Absolutely. And what are some of those early signs of value in terms of how you're measuring success internally?
I think what we're seeing is it's the productivity gains that you can get really first. That's the first bit that you can access. The ability to summarize, LPA documents, they're long, meaty documents, but actually a lot of times there are some really key clauses in there that you can start to understand sort of, how market is this for the sector that you're investing in. I think also a lot of the manager interviewing notes, running an interview process is it's a time consuming process, but also requires a lot of focus. And giving the interviewer the team member the confidence that sort of AI is working in the background to make sure they're capturing the data that's happening frees that individual up, I think, to really lean into that conversation on another level. So we're definitely seeing the sort of productivity boost. And what I'm really excited for is what we're going to discover a little bit later, I think, in the journey, which is once we see the productivity boost, I think it's then we're going to start to see um, new areas that it starts to add value, which is really around the process and thinking through an investment. One of our direct investments, we started running some of those through some AI models, and we are seeing it identify perhaps slightly different reads on risk
Hmm.
that we maybe hadn't identified so much or maybe prioritized as a team. And I think that's really valuable, almost having a sense check that you can add, to the as sort of another team member.
Yeah, absolutely. And it's interesting you mentioned obviously historically the process of learning the trade or the role of an allocator. And when I think about customizing AI agents, it follows that same pathway in terms of almost like training an intern or training an analyst over time with your data, with your internal processes, and with that perspective. So it'll be very interesting to see the outcomes that HICO gets from a performance perspective over time. And curious, you mentioned obviously there were challenges to adopting AI internally. Can you walk us through some of the challenges and how you've overcome them?
I think one of the biggest areas really was on I'll call it IT, but I view IT as not just the hardware or the software. I think it's also the behaviors and the processes around that. So something as simple as actually structuring your digital folder structure and making sure that AI has access to the right folders and that it's not going into the compensation folder to pull data from there, which just sounds so small and simple, but that's not necessarily something that you can do overnight. That takes a lot of thought, and it again, these are quite operational, detailed processes that you have to think through up front and go through that and do the hard work up front. We've also had to go to our lawyers and ask them the question of what are the data protections of these documents, from our GPs. And so there's just these real ground truths that are just absolutely critical to answer, but they're not necessarily sexy, tasks that the team are having to do. And it's not necessarily what jumps to mind when you think about adopting AI.
Absolutely. And there are no easy answers. So when you're going to your legal team, in many cases, you may be the first one or the second one asking them these questions. So they're also going through their own internal process of adopting AI within also a field that can really benefit from it tremendously. So would love to fast forward 5 or 10 years. How do you think an AI enabled investment office will look like?
I think to be clear, I don't necessarily see a world where there's not a human in the loop. I think the art or the science of allocation, I think it's a bit of both. I think it's investing in managers, and that is an inherently human approach, right? Like there's a huge part of that which is understanding human beings, understanding their motivations. Yes, I think in the future there may be quant funds where actually maybe there's not such a human in the loop. But I think especially around privates, for example, hugely important part of any portfolio, that will continue to be a very human sort of industry. And I think I view it as the combination of the human and the allocator. And what I talked about earlier of, we've seen investment teams make a judgment on the risk reward profile of an opportunity, and the AI was actually able to help bring in a new read on risk and actually identify risks that we perhaps hadn't weighted so highly. And I think it's that sort of dynamic that we're going to start to see. What I can't tell you is how the investment process will change. I think that is going to be really interesting to watch, maybe where AI can lean in more, but and maybe other areas where the human will very much remain in the loop. But the other area that I'm excited about, and we talk about this, is during rapid sort of changes in the market, our teams, allocating teams are often smaller, and they have a lot of information to digest. They have a lot of decisions to make if they're going to make any decision. And that decision making window can be small, very time constrained. And the team can be under a huge amount of pressure to run through their process to make a decision, whether it's rebalancing, leaning in, leaning out, responding to what's going on in the market. And I think that's going to be really fascinating, because the teams that have adopted AI will be able to operate that process so much quicker than teams that haven't. And their ability to respond to the market will be much faster, more responsive, but I think also making better decisions and capitalizing on those shifts in sentiment, and also working with their managers to respond as best as they can.
And so if you were to advise a MD at a peer organization who may still be on the fence about AI adoption, what is the one piece of advice that you would give them, or maybe the first step you would suggest that they take?
Well, I think the first question, the first piece of advice I'd say is, be prepared before you jump in. Don't just let AI sort of dive in and start, trawling through all your data, and because things may happen that you don't want to happen. So I think first off, it's be prepared. But I think the sooner that you start experimenting, the sooner you'll start learning, and the sooner you'll become educated. And this is going to take years, but if you don't start now, you're going to be behind that curve. And the technology will become more sophisticated. There are some brilliant entrepreneurs out there right now that are creating this technology, and they're looking for partners, and they're willing to spend a lot of time with organizations developing that technology. But as those institutions go up the maturity curve, as those solutions go up the maturity curve, you will be left behind, and you will be playing catch up with developing your processes. So I don't think that you can fully AI your process now, but if you don't start now, you are going to get left behind.
Absolutely. Chris, thank you so much for taking the time to join me.
Thank
It's a
you.
pleasure speaking. That's a wrap for this episode of the Agentic Allocator. If today's conversation gave you a clearer vision of where the industry is headed, or helped you pinpoint exactly where your own process is stuck, go ahead and follow or subscribe wherever you get your podcasts. And if you're curious what agentic AI might actually look like inside your investment office and how to get there without compromising on security or control, visit omai.com for demos and resources on AI native LP and allocator workflows. Until next time.